Maverick. Noun, unusual person. A visionary, leader, go-getter, an independent thinker. They see the vision for their life and pull that future towards them with an unyielding belief that things can and must be better. They achieve what most won't. Innovative, influential, daring, and direct, with a remarkably high tolerance for taking calculated risk. A foe to the status quo. This is Passive Real Estate Investing with Mavericks. Your host, Neil Timmins, has been involved with over $300 million in real estate transactions. He's a published author, commercial property investor, and real estate syndicator. This show is for those who want to learn how to earn passive income through real estate investing. Now, here's your host, Neil Timmins.
On this episode of Passive Real Estate Investing with Mavericks, I sit down with TJ Burns to uncover how he went from passive investor to a fund manager. Welcome to Passive Real Estate Investing with Mavericks, where we provide actionable steps for you to grow your passive income and become job optional. During this episode, you're going to get to discover how to go from passive investor to fund manager. Hey, for those of you who are new here with us, I'm your host, Neil Timmins. I love passive income from real estate. Now, before I introduce you to today's Maverick, I want to make a request. At any point during this episode, you like what you're hearing, give us a thumbs up or be sure to subscribe to the show. Never miss a valuable episode. And if you love what you hear, well, give us a written review. Plus, be sure to take a look at the description in the show notes of this episode. We packed it with thousands of dollars in free resources. Today, we've got the privilege to learn from a person who has invested in nearly a dozen syndications. Prior to his career in real estate, he was an engineer, systems design engineer at a big tech company. Ultimately, all of it changed when he got a little money in his pocket and decided it had to go someplace and became absolutely obsessed with real estate. I would describe today's Maverick as someone who's passionate about helping those in the tech field unlock their potential to invest in real estate. Let me introduce you to today's Maverick. I've got TJ Burns here with me. TJ, how are you?
I'm doing great, Neil. Thanks for having me.
I'm excited you're here. Say, for everybody's sake, who are you? Where are you from? What do you do?
Yeah, so name's TJ. I am a passive investor myself. So I've invested in 12 deals passively, syndications and funds. I'm also an active sponsor in 4 deals. I own a small portfolio of multifamily locally where I live, and I self-manage those. I have a short-term rental, and I also sell some houses as a realtor. And before all that, I was an engineer at a big tech company, still am. And, we can talk about the balance there and the transition, getting into real estate and all that.
Well, tell me, before I go too deep into the real estate thing, what was the transition? You're still active. I mean, you're active doing like what you described to be like 6 full-time jobs to me, but you're active as an engineer. What was the genesis of investing in real estate?
Yeah, I mean, originally I saw my life playing out as I would work for myself at some point in the tech sector. So I always wanted to run a design consultancy. My field's in product design, so my background's mechanical engineering. And I figured that at most I'd spend 5 years in the corporate world kind of getting some experience, and then I would go off on my own and be a consultant. And the genesis of that is I just wanted that personal freedom. My parents ran their own business growing up, and I saw how they were able to be at all of my sporting events and, every graduation. And I wanted that for myself, right? So out of college, I got a great job, worked at a startup that was acquired, and it was a great gig. It kept me there for longer than 5 years. But at the same time, like I still wanted that personal freedom job, something that I could do on my own pace. And at that time, I kind of got into real estate just by accident. I started browsing around the internet, different ways to invest now that I had this job that I, had some disposable income. Yeah. Of course, real estate pops up as one way in which people have made a lot of money and have achieved financial freedom. And for me, it was an obsession for a long time. Before I started investing, I'd say about 3 years, I spent just researching and looking at markets and underwriting deals and making offers, which at the time were all terrible offers because I didn't know what I was doing. I couldn't even get a broker to call me back.
Sure.
But I was gaining a lot of experience that would come into play later on when I did start to gain some momentum. So, it was a slow roll for 3 years. And then once I started to pick up some steam, I really could see how this was going to impact my life in a huge way. And with that, the dream of running my own design consultancy, I can't say I'll never go back to that, but the real estate thing has just been so much more appealing. And that's how I got into the passive investing and then eventually active investing because I liked it so much and I wanted to share it with other people.
Yeah, no, that's a fun journey. So let's talk about your first investment was that as a passive investor. Tell me about that particular deal. And then, I'll ask you some questions so I get a better understanding of how you ended up moving forward. So tell me about that deal and, how'd you find the sponsor? What kind of questions did you ask the sponsor in that particular deal? Yeah.
So my first deal actually wasn't a passive investment. I kind of did a lot of things all at once. And I think that, first I'll talk about the passive investment and how that ties back into what I invested in before that. But I actually found a wallet on the street that was that was owned by a syndicator, and for looking him up online, I saw the things he was doing in his business, and I returned the wallet to him, and I told him if he ever had any deals to let me know. And I ended up being one of his first passive investors, and we did a deal down in Florida that ended up being a really good deal. We held it for 16 months, and just a little bit over doubled my money there.
Wow.
And that was the proof of concept, I guess. And, while that deal was playing out, I made a bunch of other passive investments because I could already see the writing on the wall of how this was exactly what I was looking for. And the funny thing is that in meeting these other real estate investors, which they were some of the first real estate investors that I had met ever. I really wasn't the person that went to all the meetups or the seminars and things like that. I almost felt like it gave me license to now go and be successful in my own investments where I didn't have any partners. Yeah. For the longest time, I almost maybe was psyching myself out, right? Thinking that this is way too hard. It's got to be more complicated than how it seems. And then as soon as I started doing these deals with these other individuals and seeing how they were doing it, I realized, okay, maybe I actually know a lot more than I thought I did. Maybe these last 3 years that I spent just researching things, I can put all that knowledge to practice, So I ended up buying a single family home down in Florida that we developed. It was a new build, talk about picking that for your first deal. It took 16 months to build it. And at the end of it, we just sold it at the height of the market and rolled that into other syndications.
Sure.
And then we ended up going the house hacking route back where we live, where we bought a small multifamily and rented one out and lived in the other side.
Where's home for you? What state? What city?
New York. So we live, meaning my wife and now our son who was just born, we live on Long Island.
Okay. Yeah. All right. So at this point, you've done several passive investments, and you decided it was time to get active. Tell me about that transition from active on the syndication side. Tell me about that transition and what was it sounds to me like, as you said, you're obsessed with it. You love it. Tell me about that first deal that you were involved in then on the active syndication side.
Yeah. So I probably made about 5 limited partner investments in that first year. And while I'm making these investments, I can't stop talking about this new method of real estate investing that is brand new to me. I didn't know syndications existed before this.
Sure.
And I just can't help myself. I'm telling, anybody that will listen about this new investment vehicle. And it was around the time of maybe about a year into making passive investments that I started to take a step back and look at how I got here and why it was beneficial to me, and more kind of looking at like what I talked about, being in tech, working long hours, being compensated quite well, living in an expensive market, which a lot of people in tech, maybe not now, but traditionally live in Silicon Valley or Seattle, New York, Boston, areas where it's a little bit harder to invest in real estate just from the jump. And I saw that I could apply that to other people that I worked with, like that it wasn't just me that would benefit from this, and I realized too that I could add a lot of value to existing syndicators that were doing deals, that there was a need to have money raised, like, raising money is a skill. So that first deal, it was with the individual that I found his wallet, going back a few years. We had a relationship built up. I had invested in a number of his deals. We would speak, a couple times a month. We had met in person a few times, and I felt really comfortable with him. I knew how he ran his business, who he was as a person. And I just approached him and said, hey, if there's ever a need for me to raise a little bit of money alongside of you and maybe pick up some of the other tasks and we can do this together, then let me know. And he said, yeah. So we ended up partnering on that first deal, doing a little bit of the asset management together and kind of showing me the ropes there, and then me doing the investor relations and bringing a little bit of capital to the deal. And that was the proof of concept for me and my business now, which is Burns Capital Partners, where I raise money from people in tech that want to invest in real estate.
Yeah. And so when you're doing that, what types of asset classes are you now investing in?
Mostly multifamily. We do have a short-term rental fund with partners that I also met in multifamily. But for the most part, it's multifamily, and I'd like to branch out. For me, it starts with the people always. Sure. So, I'm working on building that relationship with people in other asset classes, like, of course, self-storage and mobile home parks, where I can eventually feel comfortable enough to put a fund together and raise capital from some investors.
So going through this whole journey from a passive investor through now nearly a dozen passive investments and active, what do you wish you knew when you started when you placed your very first dollar as a passive investor? What do you wish you knew? What do you wish you asked?
I wish I asked everything. For the longest time, I felt like I let me put it this way. I didn't want to be the dumbest person in the room, which is a bad way to approach anything that you're new to. Kudos to the people that go to the meetups and have zero experience in real estate, that, reach out to active sponsors and ask a million questions. For some reason, I'm the type of person where I have to figure everything out the hard way, So that's the main thing, and like I said, once I started to ask a few questions, that's when it clicked for me. And then it was just a tidal wave of activity.
What do you wish you knew? So how about, instead of asked, but what do you wish you had known? What do you wish a sponsor would have shared with you early on that now perhaps you share with your limited partners to make sure it's part of, an education or onboarding process?
Yeah. One thing that comes to mind is how all the private equity stuff of the business works. Nobody really ever explained to me the difference between a fund manager and an operator, so I was investing in some deals where I was actually investing in a fund that was investing in real estate. And then in other deals where I was investing in a syndication directly. So that's one thing, for your listeners' benefit, there are different roles that people play in this business. So my role is more on the private equity side or raising money, where I'll put a fund together and I will deploy that fund into real estate deals. Now, the reason that the economics of that work is because some operators don't love raising money, or maybe they don't have the means to raise as much money as they need for a project. So what they'll do is they'll give better economics to somebody or some fund that can bring a larger check. And then what I can do is I can give that access to my investors. Maybe it's a deal where the minimums are really high and I can lower the minimums through my fund. I can maybe give better returns to my investors. they gain my expertise. So if my investors have invested with me before and they're comfortable with me, but maybe they don't know the operator yet, they know that I'm doing my due diligence on the deal. So yeah, that's one thing that was, I just kind of figured out over time. And I don't think is always explained to investors.
Yeah, there's certainly a tremendous difference between those two. What are you most excited about this year?
So in my life, my son was just born about a month ago. So
Congrats.
Thank you. Yeah, that's
it'll change your world.
It does. Yeah. And that's been real exciting. It's a huge understatement, but, and on the business side, I'm just, starting to do deals again in 2023. So we just had our first offering of 2023, this open up in the last couple of days. And, I raised about $800,000 in 3 days for that. So, I'm starting to see the seeds that I've planted in my business, where the first thing that I did going back to that first deal is I just kind of called up friends and family. Yeah. And I expected a lot of interest because it had been working out so well for me.
Right.
But what I realized real quick is that people don't invest in things they don't understand, So
yes.
I had to go back to the drawing board and really figure out how to build this pipeline of, finding leads, educating them, building a relationship, building that trust, and then eventually bringing them a high quality deal where they felt comfortable investing, So that's been my focus for the past year, and I'm now starting to see, the benefit from all that work.
When a passive investor is looking at a potential opportunity, what should they be looking for inside of an operator or operators?
Yeah, one big thing is just understanding if they've executed on this business plan before. Now, I'm not going to say that it's a necessity. People have invested with operators that are brand new before and done well, but to me, it's really comforting to see that this deal that we're doing, like for example, let's say a value add multifamily deal in some market, that the operator that we're working with has done this exact deal dozens, maybe 50 plus times. I think seeing that the execution risk there is mitigated is important. So that's one big thing, and then. I really look for like somebody that has a big presence too, like a big online presence, or I guess another way to put that would be a reputation. Mm-hmm. I want to make sure that somebody that I'm working with has a reputation to protect and uphold. And, if things do go wrong, that they're going to work as hard as they can to fix them just because they want to, protect the name that they've built up.
Diving past the operator into a deal, what should passive investors be looking for or asking about inside of a particular deal, the asset itself?
Yeah, one thing to really dive into always is the market. That's the market's usually going to dictate how the deal does, more so than the specific deal. That's a blanket statement, but for example, if you can see overall macroeconomic trends in a market that are going to drive a lot of value to an area, then it's exactly what we saw with places like Phoenix and Florida over the last few years, where we have these huge waves of people moving to these areas. It drives up demand. Yeah. Areas where there's a lot of business friendly laws, that there's less risk because the laws are more landlord friendly. And then, of course, looking at the deal itself, I always like to review the underwriting, even if I'm a passive investor. And that'll tell you a lot about, the debt assumptions that the deal has. So my feeling is that with these types of investments, because you're taking on leverage, that's where a lot of the added risk is. People wonder why syndications, an average return is something like 15, 16%. Why that's more than the stock market, and I think it's because of leverage, right?
Yeah. It's 50 to 75% of the dollars are borrowed. Right.
Exactly. Yeah. So with that, you get better returns, but there's also more risk. And, you want to make sure that the debt assumptions are conservative, So right now what's popular is because the debt market is a little bit more uncertain than we're used to.
Right.
Seeing longer terms for the debt, 5 years is kind of what I've been seeing on syndication deals. And then, fixed rate, which I'm actually curious now what people think about that with where rates are at and kind of how people are anticipating a Fed pivot. We're talking in May of 2023 for your listeners' benefit, but I'm actually curious, maybe I can ask you quick, if people are starting to go back to floating rate debt a little bit just because they're anticipating maybe rates are going to drop. Yeah. Is that what you're seeing?
I have seen a number of people doing that. I've seen a mixed bag, right? People on both sides of that. I am hearing more about people using floating rate or real short-term stuff because, their belief, their assumption, right, in their models is interest rates coming down in the next, 12 to 24 months.
Right. Yeah. And I always look for the story of the deal too. Like I want to understand why a seller is selling in the first place.
Mm-hmm. Yeah.
I want to, I think that's very helpful to see, and a lot of the stories that we see are tired landlord, mismanaged deal, not keeping up with rent increases that we've seen over the last few years. And then right now, maybe even sometimes like distressed debt. So, debt terms coming due in the next few years.
Right. What's the average size of deal that you guys are buying?
So I operate in kind of the smaller realm of syndications. $2 to $10 million purchase price is where I like to be.
Yeah. Let's do this. I want to move on to the final segment, what I call the final four. What do you think holds most passive investors back from hitting their personal next level, whatever that happens to be?
I think it's fear. And that's what it was for me. It's fear of failure at first, thinking that just because these types of investments come with risk, that there's inherent risk with anything that generates a return, sure, that it means that I'm rolling the dice and that, I'm going to wind up with less money than I started, and the way I got around that was just reframing these investments as tuition, so I spent a lot of money and my family spent a lot of money to send me to college, and nobody had a problem with that. But when it comes to investing a few $10,000, $20,000, $30,000 into a real estate deal or even into personal education to learn more, all of a sudden that felt really scary to me. Right. And then with that, like just saying, hey, well, if I'm going to go to grad school and I wouldn't have a problem with that, I'm going to spend 50 grand at least to do that. Why can't I take 50 grand and put it in this investment with all this upside? And even if it goes to zero, I would bet that I'm going to learn a ton.
Sure. Yeah. What are you passionate about outside of real estate?
I have a lot of hobbies. So, right now it's and caveat because with the baby, I haven't been able to do much, sure, but, some real estate stuff and sleep and take care of him. Yeah. But, hoping to get back to jiu-jitsu, which is one I picked up in the last few months. Before that, love to scuba dive and surf and be outdoors. Big into exercise. So, have run a few marathons and ultra marathons, and love to snowboard in the wintertime.
You're an active man. Your favorite?
I like to run around.
Yeah, for sure. Your favorite book?
Favorite book? Is that a business book or
any book? Dealer's choice.
The book $100 Million Offers by Alex Hormozi is a really good business book. Yeah. I got a lot of value out of that. The one-page marketing plan too. That's a great book for anybody starting a business. It's very clear and action-packed. I'm also a big fan of reading fiction books like James Patterson, just to kind of turn the brain off.
Your favorite way to make an impact in the community?
So my wife and I have a couple of foundations that we like to support. They're just local foundations that are run by a couple people, where most of the money goes to whatever cause that they're passionate about, so that's the kind of donations that we like to make. Or it's really just those two foundations. And other than that, just kind of trying to live our values, and by virtue of that, other people seeing what we're doing and naturally becoming curious and wanting to, get involved, and hopefully us sharing some of the good stuff, that we're doing.
Yeah.
That.
No, that's great. The Maverick Vault, we launched this year. It's a collection of resources available to our listeners. I understand you're making a contribution to the vault, the syndication due diligence checklist. Tell us a little about that.
Yeah, so it's a checklist. I think it's got, somewhere around 50 points on it on things that passive investors should look for when they're evaluating syndications.
No, it's a wonderful contribution. Appreciate that. You guys can get it at www.themaverickvault.com. TJ, you've got an amazing story about you've come out of tech, you're still in tech, and then worked in from passive and active at the exact same time, and now really I'm working in more of an active syndication role, helping those in tech find ways to place dollars and cents into real estate. It's a wonderful story, and it's a unique niche, and certainly one that's, I have to imagine, dramatically underserved. So it's wonderful that somebody can go out there and help change the lives of those in the industry. So I commend you for what you're doing. For people, they want to find you, they want to follow you, they want to connect with you. Where can they go? What should they do?
Find me on LinkedIn, TJ Burns on LinkedIn. And my website's also burnscapital.co. So it's my last name, burnscapital.co.
Perfect. Links will be below in the show notes. TJ, I appreciate the time. Thanks so much for being here.
Thanks, Neil.
You bet.
To our listeners, pat yourself on the back. You guys have made it to the end of the show, and most people never finish what they start. If you receive value from today's show, be sure to share it on LinkedIn, your Facebook page, or your social media platform of choice. Subscribe to never miss a valuable episode in the future. And if you found value in today's episode, give us a thumbs up with a positive review. If there's a particular topic you'd like to hear about, well, I want to hear from you. Shoot me a message on LinkedIn. The link to my profile is below in the show notes. You can connect with me there for more valuable content.